Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, Arizona Mining published an updated resource estimate for the Hermosa Taylor discovery in Arizona on Monday. The stock price is unchanged. Is this a case of the company meeting market expectations?
Indeed it is, Jim. The resource that Arizona Mining produced converted into metric tons. Their base case was 103 million tons of about 4.7% zinc, 4.4% lead, and 1.8 ounce per ton silver. And that's a substantial increase from the 40 million tons of a somewhat lower grade that they reported in early February. It's based on substantial drilling since work started in the first quarter of this year. But even more importantly, that was done at a 4% cutoff for zinc equivalent. If you do it at a 6% zinc equivalent cutoff, and they published the resources at various cutoff grades, you end up with about 81 million tons of 5.3% zinc, 5.5% lead, and 2.5 ounces of gold. And that number, 80 million tons, is about what supports a 20-year mine life with a 10,000 ton per day mining operation. Now the valuation at around 270 to 280 where the stock is now, it's between 700 and 800 million dollars. So that's a pretty good valuation. And keep in mind at the start of this year, this was a 35-cent stock. So this is one of the best performing stocks. It has not succumbed to the lull in the resource sector rally that started in mid-August and is still plaguing the sector. It is a world-class discovery, and they even gave us a scenario where they used a 0% zinc equivalent cutoff where it's 750 million tons, and they've only drilled about a third of the known strike potential of this system. So this is a very, very big system. But when I crunch my numbers, the kind of price that you get right now, that we have right now, that is a fair value for the project at the moment, which is why the market has not traded it higher. And it's also why the stock hasn't sold off like almost everything seems to be doing these days when any sort of news comes out.
What needs to happen to drive the stock higher ahead of a PEA expected in the second quarter of next year?
Well, there's one of the things that the company is working on is they would like to be able to mine this using a decline where they, spiral down, and you can have a fairly large, basically a tunnel that goes down to where the ore horizon is. And when you have something like that, you can, and it would go several kilometers would be the length that this goes, but you would be able to have large trucks that haul a lot more than the 10,000 tons per day that you can physically hoist through a vertical shaft. And getting this done requires them to gain access to surrounding land which they do not own. And I understand that they have been in negotiations with various parties involving such potential access points outside their existing holdings. Should they succeed in getting a deal like that, then all of a sudden you can start putting in much bigger throughputs, 20,000 tons per day, 30,000 tons per day. And of course, they will need to produce more of a resource to support that. But given the footprint of the enormity of this discovery and 14 drill rigs churning away, I don't think they will have any problem ultimately coming up with enough ore to support a 30,000 ton per day underground mining operation fueled by a decline. The other thing that can happen is zinc price can go higher. One of the Bay Street firms came out with a $4 price target using, 10,000 ton per day scenario similar to what I have done, but they're using a zinc price that's 20% above the current level. Now, zinc had a good week in the past week. It made it over $1.10. In the past few years, zinc, every time it hit $1.10 per pound, it would end up retreating and going back to 80 cents a pound or something like that. So if the zinc bull market is finally arriving and we get to plug in $1.20, $1.30 zinc as a long-term future, then of course the stock can go up ahead of the PEA. So two major developments. One, being able to do a decline to increase the throughput, and two, the zinc price taking off. Both those factors could make the stock head higher in the interim until we get the preliminary economic assessment numbers sometime in Q2 of next year.
Azimut Exploration reported initial drill results for its Eleanor South project in Quebec. The stock price didn't react. What have we learned from this initial drilling?
Well, I personally had high expectations for this project. Azimut Gold Corp and East Main own the southern part of the Chichu intrusion, where Sirius Resources has done created a stir earlier this year with its drilling activity on the northern half. Now, Azimut went in there and drilled 12 holes. It developed the theory that there were these structural corridors within the tonalite striking in a southwest direction, and right at the border with the Sirius project, they found the Moni prospect, which was a high-grade outcropping rock with some very good values. They have drilled underneath this, and they came back with a short interval, a couple of meters of 8 grams, and also a longer interval of lower grade material. And they also drilled several holes along the southeastern flank of the Chichu intrusion. And based on the experience with Sirius, it appears that there is gold enrichment at the margin between the country rock and the tonalite intrusion. And they got lowish grade numbers from this also. So the market's kind of saying, okay, we were hoping to see much bigger gold enriched zones. What we're getting is some of these numbers similar to what Sirius got in the earlier days of its stuff. So the market failed to respond because it has not seen the sort of barn burner discovery hole that kicks off a feeding frenzy in the market.
Sirius Resources reported results for the first 5 holes at Chichu in early October and announced the drilling had paused to allow assays to catch up. This week, Sirius announced that it has resumed drilling the 3,000 meters remaining in its 10,000 meter summer program, but did not report any results for the remaining holes drilled during the summer. What's going on here?
Well, the market is wondering that. There was rumors that the holes drilled in the southeastern corner near 52 had intersected visible gold, and we were expecting results at least for those holes sometime in late October. And the reason the company stopped drilling in early October was they wanted the assays to catch up so they could better understand where to drill next. And now they are proceeding with the remaining 3,000 meters of drilling, and it's going to be largely focused in the southeast corner of the tonalite intrusion. And so the market's thinking, okay, when you tell the market that we're going to batch all the drill holes when they're all in and release them, that's probably not good news, which is why we're seeing Sirius' stock price fading. It's dropped below 50 cents as of Friday. And the question is, okay, is this play done or not? Well, I talked to Dominique Doucette, and the problem they are starting to encounter and recognize is that they will see visible gold in the core, but when they get the assays, sometimes it's fantastic assays, sometimes the assays are quite mediocre. And what they're starting to recognize is a nugget effect, and they're having some of the holes re-assayed with metallic assays and so on to get a better sense of what is the actual grade of the mineralization. And one of the things, and this applies both to Azimut with its Eleanor South project and to Sirius with its northern half, the Chichu project, is the recent hope was that this was going to develop into an underground mineable high-grade system. But the structures that are enriched seem to be very complex, dealing with intersections of different structures, folding. And what Jean-Marc Loulin of Azimut has observed is that there are pegmatites, which are not late-stage cross-cutting pegmatites, but part of the whole tonalite intrusion system in the later stages of it. Gold mineralization is showing up enriched within these pegmatites. So the thinking is starting to shift back to this will probably end up as a bulk tonnage system, one of several 100 million tons. And the goal, of course, would be to see 1 gram per ton or better as an averaging thing. So we're shifting into the area of statistics, geostatistics. What is the distribution of the gold? If there are all these enriched little zones in here, how do we measure their presence so that we can do a bulk tonnage scenario? And so that is in the works right now. I don't expect either for Azimuth's remaining 7 holes anything spectacular. It is turning into not going to be a blockbuster, a high-grade, follow-the-zone type of discovery. It's going to be one of stitching this thing together and gradually increasing the understanding of the distribution of the gold and hopefully eventually coming up with a bulk tonnage resource.
Endurance Gold reported partial drill results for its Elephant Mountain Gold project in Alaska, about which the market also yawned. Is the market just not paying attention?
In the case of Endurance, it's a fairly obscure junior, hasn't made much noise about its project. They drilled 2 holes in part of the south zone on Elephant Mountain in the midst of a large gold arsenic anomaly. Now, the backstory on this is that since 1898, placer miners have been mining gold from the creeks that drain from Elephant Mountain. And Placer Dome itself looked at this project in the late 80s and drilled a few holes and concluded, well, nice anomaly here in the soils, but we don't see the zone. So what Endurance Gold is trying to figure out is where is there the enriched structure hidden beneath all the overburden material that is the source of the soil anomaly as well as the gold that's ending up in the creeks several kilometers downstream. And one hole was an unoxidized hole with a lot of massive sulfide stibnite, antimony, one of the metals associated with these intrusion-related gold systems. So they had that rush assayed, and they reported a 4.6 meter interval of 4 gram gold, which included a shorter interval of 20 gram gold. So that was very encouraging. They had drilled a second hole as a scissor hole, and it was all completely oxidized and busted up, and they had not sent this because they wanted to see what the other stuff ran. But the theory now is that you can't see the sulfides, and obviously you never see the gold in this type of system, in that second hole, and now they're waiting with somewhat bated breath for the results there, because the trick is to try and find out where is the structure within this general soil anomaly that is enriched with gold. So the market says, well, show us that this other hole is mineralized, and it has the potential, precisely because you can't see anything, but you've got the geological context linked to where it was just offset a bit, not altered at all. You have the potential to get a decent assay from that, and so we hope to see, by the end of November, a good assay for that second hole on the south zone.
Discovery Watch with John Kaiser will be back right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
We're talking with John Kaiser from KaiserResearch.com. John, Playfair Mining published an update about its Ox Mountain project, which did not include any numbers, but the stock is perked up. Was there anything interesting in the news?
Well, as you may recall, this project is in Ireland, and they have outcropping quartz vein material with high-grade gold. The hope there is that there will be something similar to the Coronalt gold deposit, where there's about 2.5 million ounces of high-grade gold that Dalradian has at an advanced stage of feasibility demonstration. And they started a drill program a couple of weeks ago. They have drilled 6 holes, only 526 meters. They are shallow holes, but they are intersecting the structure. And one of the things that's intriguing them is that they're observing alteration within the wall rocks of the structures where they hope the gold is mineralized. And this is apparently different from what has been seen in these other gold systems like Dalradian's system. So that has them hoping that maybe something bigger and better is going on in this area. They, of course, cannot tell if there is any gold in this, in the sulfides associated with these quartz veins, but because they're starting to see some vertical extension to what you have at surface, they're starting to see a geological context that gets people optimistic that we may be onto something new. The stock actually inched up a few pennies when they put out this update that, hey, the program's underway. We are seeing stuff that we're pleased. We will need assays to confirm it. And then, of course, there's considerable strike extension potential here. Much of it is obscured by farmland. So you start with the outcrop, you follow it. If you're getting the structures, if you get the gold mineralization, then you could have yourself a discovery on your hands where everybody will be watching very carefully what is the next hole intersecting. Is it getting the structure? And then starting that whole speculative game of guessing what the grades will run when they are eventually delivered.
Do you have any new discovery plays we should be keeping an eye on?
Well, the one I'd like to introduce today is Monarch Gold Corp, which owns the Coronart project in Quebec. It's within the Abitibi Belt. It's east of Val d'Or. It's closely associated with the Cadillac Break. It is a project the company acquired from a bankrupt junior and another junior that was focused on other things. It has a modest gold deposit. A lot of holes have been drilled into it. 140,000 meters. The company actually delivered a pre-feasibility study a couple of years ago, fairly small scale, 400 to 600 tons per day, shipping it to another mill, but it was only going to mine 115,000 ounces over a 5-year period, and even at the 1320 gold base case, it wasn't going to be very, very interesting. However, what the company has since decided to do is, well, we need to do some additional drilling. We need to go convert the inferred resource into which is only about 50,000 ounces, into a 150,000 ounces. They have another 100,000 ounces in addition to the 100,000 proven and probable in the indicated category. What they would like to do is restart this as an underground mining operation at a modest, 400 to 800 ton per day system, and keep it going forever and ever and ever. And last week they closed the acquisition of the Beacon Mill, which is about 60 kilometers west of the project. They would mine the ore and truck it to the Beacon Mill. It's going to cost a couple $1 million to refurbish, get back into action, but it is better than the prior option, which was trucking it 105 kilometers to the Richmont mill. So the 10,000 meter program that they're doing now is working on converting the inferred resource, expanding it, and it's also going to involve a couple of deep holes down to about 500 meter depth. The existing resource goes to a maximum 350 meters, and they are also drilling holes into an area just to the east of the known resource called the Gold Bug Showing. This is in the volcanics, not in the granodiorite that hosts all the Quanor resource. And there they had some pretty high grade, a very high grade interval a year ago when they finally drilled into it. They do not understand the structural controls in this area, but the high grade values has them very interested. And two major investors showed up earlier this year and coughed up $3 million. One was Rob McEwen, whom everybody knows who that is, and the other is Greg Chamondi, former chairman of Beaumont. They both came from different perspectives. Richmond, of course, is famous for taking these Ontario-Quebec gold systems and having several years of reserve, but mining them forever and ever and ever. And Chamondi's goal is to see the Quanor project turn into this endless cash cow that goes on and on forever. Whereas Rob McEwen, he's looking at the blue sky. He's saying this is a very large land package east of Val-d'Or. All the focus has been on this Quanor zone. We're seeing mineralization now outside what was thought to be the primary host. We're seeing mineralization starting to be found along strike. So he's hoping to see this thing turn into like a multi-million ounce system discovery, sort of swing for the fences type of blue sky. And the company's got a strategy going which can deliver either of those results.
John, thank you so much for giving us this update.
Thank you, Jim. It's been a pleasure.
We've been talking with John Kaiser from KaiserResearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.